minutes left. Woo! Ding ding. That was fun. How you did that? Just doing fun stuff. They were gonna leave that gap in their 80,000 calls at 60 out of the money, right? I was busy staring at code. That was awesome. Teach us. That was just a good time. No big deal. Anyway, looks like we closed today literally right on the nose with the MM's expected move, 90 BPS to the upside. We don't look super bullish momentum wise, and somebody bought a huge put wall at 50.75 and a ton of puts to the downside. So I'm thinking that the majority of people expect that the NFP data in tomorrow morning is going to be hot, right? Like we're gonna have a higher non-farm payroll number, and labor is going to remain strong, which should boost dollar and inflation expectations. So the financial condition easing that we've been getting since the FOMC meeting, and with that risk off the table, that can start to tighten back up again. We'll probably see more of that tightening as we move into CPI, PPI, if those continue to be hot. So, we have a little bit of easing right now because the FOMC and the QRA and everything's out of the way. But I don't think it's going to last very long. There's Apple like right now. Apple has earnings tonight. I don't know when they're going to release their EPS and everything, but probably within the next 15 minutes or so. RSP lagged the index a little bit, 62 points on the day. NASDAQ overperformed. We saw a lot of tech running, pretty much everything. All of the Mag 7, I think, were up today. Even Apple. We're just above trend on a reversal here. Although this whole thing is kind of bearish. But we did break above 50.90. We're at the 5100 test. There's a big put wall here, right here at 5103. That level's super important for futures. We may push up into that during the overnight session in preparation for tomorrow's data. And then if the data is bullish, the bulls will push up into the out of the money calls that they purchased today, which are kind of between 50.90 and 51.25. So there's a good ramp up to 51.25 if the NFP data is kind of cool. If it's hot, however, there's a metric ton of puts to the downside, all the way down to 5,000. Transitions are pretty strong too. There's some weakness around the 50.30, 50.25 level, but it's not that weak. So the bears are more than prepared to shove it right back down if the data misses. And I think it will be largely dependent on that data. At the money, tons of straddles. 50.50 through, actually like 50.55 through 50.65. Gamma's almost flat across that range. So that's probably where the majority of our straddles are. I would say strangles are probably around 50.75, 50.30, that range. So remember, even if the data's bad, we might bounce a little bit, clear out the call side of this like neutral positioning before falling, especially given that we're kind of right up against the edge of that. Commodities today bounced back a little finally, after 3 days of declines. So we'll see if that starts turning back around. It's still on trend. So the uptrend that saw this bullshit finally break out hasn't failed, or well, the breakout from that hasn't fully failed yet, but it is pulling back quite a bit. Dollar is down a lot today, back at 105.30. This is the lowest it's been since April 11th, so about 3 weeks ago. And a lot of that on the back of the yuan and yen pushing up, and there was some intervention, I think, again yesterday on USD JPY. Core 1 and 3 month turned around a little bit today, but not very much. So they're still not leveraging up dispersion as hard as they could. But I imagine if Apple beats tonight and NFP is not really bad, they'll continue to push the dispersion trade, which if you guys are long like Amazon or Google or Nvidia, will benefit those all quite a lot. Tesla probably too. Tesla's pretty well set up to continue our run to the upside. Carry trade massively levered down. Leverage falling off pretty much all day today. I think we went from a high this morning around 8.5x down to 8.3. So a pretty big turnaround there. Forward yield on volatility is negative again. The yield curve is kind of uninverting a bit. So all of that's easing financial conditions and allowing bulls to lever up a lot harder, which is why they were able to push up so much today despite all of the bearish positioning. I'm not really sure that that's updated. It's probably not. People are still carrying a lot of tail risk hedges as of yesterday. 38.17% of the S&P over its 20-day moving average, and a deeper break in correlation between cash VIX and VIX. So they're they're still shorting vol really hard. They're just not leaning into dispersion yet. And we are now pricing in zero point 0.3 or 30 points of rate cuts for 2024. So rate cut expectations went up a bunch today. I'm not sure why. None of the data this morning really supported that. Jobless claims were pretty flat. Productivity was way down. Labor costs were way up, and factory orders were way down. So none of that really screams growth to me, and all of it screams inflation. So we'll see. Also, the 30-year mortgage rate for last week moved up to 7.22. It's not really that important, but it's something to note. And then I think that's about it. Do you have anything else that I'm watching closely? Keep an eye on oil. It's been dropping. That's partially going to ease inflation expectations as well, especially if it continues to drop like sub 78 to 75. Yeah, I think that's about it. So thank you guys so much for tuning in. I'll have the write-up out tonight, and I'll see you all tomorrow morning. Later, everybody.